Hey, what's going on, everyone? This is Tyler Coates, also known as Sawcruteez, joined by my two co-hosts, Mr. Fibo Swanee and Joe Saz. We are the Honest Analysts, excited to share our most up-to-date opinion about the price action of Bitcoin. We will all be diving into some charts to share our own unique tools that we use to analyze the markets. Each of us have developed our own indicators and signals that we use to trade our own money, and that is one of the things that is so exciting for me about this show, is to get three very unique systems together that I think complement each other very well. So I will be really looking forward to getting Joe's opinion about the order book and Mr. Swanee's opinion about what he's seeing out of the Fibonacci retracements. And before seeing how they're doing, I am going to go ahead and share the sponsor of today's show. And that is an exchange that I'm excited to share with everybody for a couple reasons. And there is a link here at the top of the description that is an affiliate link. And there's a couple reasons why you would want to use that, potentially outside of just supporting this show. And I'm going to share with you right now very quickly. The link that is posted is a unique affiliate code that's a unique bonus. Usually, links that are affiliate links, they all are the same discounts or whatever, but this is entirely for this show, and I worked with the exchange directly to get this set up. So I'm excited to be able to share this exchange, potentially no risk for the first 100 signups who would get a $10 credit to their account with no deposit required. And then you can withdraw the profits if you are able to run that up. And so that's one of the reasons why I'm excited to share. And then also there, you will get a free 1-week premium trial membership, which allows you to trade spot for 0 fees. So that's something that is really interesting. You get a free $10 and you can trade for a week with no fees if you're one of the first 100 signups. And what I like is that they have not only Bitcoin and Ethereum, which is pretty common, but also Link and Gold. You're not seeing Link on too many of these sites, so that is a really good offering to have with the volatility that's recently seen. And you can't trade gold basically anywhere by using Bitcoin as margin and signing up with only an email address. So BitMEX did recently announce that they are going to KYC in the next month, everybody there. So anyone that is looking for an alternative, I think this is a good one to go ahead and try out. One of the main reasons why I am interested in it is the volume that they have already come by on the contract market here. They're putting out consistently over $200 million in daily volume. That's a serious competitor. That's a serious player. That's up there with the top ones, and they're new. So that tells me they're doing something right. And I'm.
So you're saying they can leverage? You can leverage gold?
Yep, you've got gold right here with just the volume on gold isn't great, and I talked to them about it, and they said that's something they're going to focus on improving. Okay. But the line is there isn't many options. This is one of the best options that I know of to trade gold anonymously with Bitcoin as margin.
Nice.
So yeah, definitely some good options there. And like I said, first 100 people get a free $10. And it is like something else that's unique to this show. It's not automated. They'll have to manually credit the account. So it may take a couple days from when you sign up until you get that bonus. So just be a little patient. But first 100 will get that free way to try out the exchange. And I'm definitely giving it a try myself because of the recent announcement from BitMEX and because of the volume that they are showing on the contract market. And I'm also very intrigued by their model for the spot market of 0 fees, paying a monthly membership subscription. So that's something that does intrigue me if they could get a little bit more volume there. So thank you guys for letting me share that. I'll be excited to hear what people think, because I'm myself now very much in a demand of needing to find what is the best thing available to me. So with all of that being said, it sounds like Mr. Joe Saz has a big announcement to make, and I've done enough talking now, so I'll go ahead and send it on over to you and let us tell you what's been happening in your life since we last chatted.
Oh, I accepted a position as the CEO and partner of Embly USA. Embly is a crypto debit card, so you can deposit your Bitcoin and have a debit card that allows you to transact anywhere, minus a handful of countries across the globe. And it's a great service. I think that this is going to be one of the ways that people can get their money, essentially use this as an off ramp, as opposed to something like Coinbase or some of these other shitty off ramps. So I look at Embly as a way to innovate and bridge the gap between Bitcoiners and more traditional people that like a debit card, a more kind of traditional feel of the existing financial architecture. So yeah, Embly is going to be I think it's going to be an amazing company. It already is. And I'm very proud to be part of the team. I'm very, very happy to contribute in any way I can, and I look forward to making this an amazing product.
That is very, very cool, and congratulations. I'm trying to add a link. I just found this out myself, and trying to add a link, but I'm out of space in the description, so I'll have to figure that out. Embly is spelled EMBILY. So go ahead and check that out. That is anybody that watches us play poker. We will be often joined by the CEO, Alex, and he is definitely knows his way around the poker table. He's usually bullying Joe around and taking his money. So maybe he felt that.
Not just me. He can mess with a lot of people. He makes you pay to see cards.
You're the only one he offered a job. Yeah, it makes me wonder.
Thank you so much. Oh, man.
So yeah, congratulations there. And yeah, we will want to dive right into the charts. I think we started with Fibo last week, so we'll start with Joe this week. But before doing that, just check in with Fibo and see how things are going. You've been getting in some disc golf?
Oh yeah, that's actually what I wanted to talk about. I got this new disc I showed you. And yeah. I had to get this one because of the spiral on it. I like the die job that they have on here, which is really awesome. I used it for the first time yesterday, and I basically nailed it. The course here locally. It was a 320-foot hole, and I basically parked it with my first throw off this disc at 320. I was about 6 feet away from the pin. So it's all about the spiral, baby. It's all about the spiral. So I've been doing good. Just working and trying to get out at the disc golf courses to get outside and just be out in nature for a little bit.
That's what I like to hear. Well, Joe, why don't you go ahead and get us into some charts? I'm excited to hear what you. I've been seeing. I've been paying close attention to the order book myself, and there's been one thing specifically been happening that I haven't really seen before, and I'm kind of curious if that's been happening something similar on Binance. So I'm going to have an eye out on that order book depth, and we'll be interested to hear what you've been seeing. Is that gold mine still playing out? Are we getting any more signals?
So let's enable screen share real quick, and I'll show you something that matters. It's getting me a little sketched out, but I'm not really losing my mind here just yet.
You're short? Is that what you're saying?
No, I'm currently in no position. I was letting Bitcoin do a lot of the work for me, but man, we've really done a lot of these face checks back into the gold mine a number of times. I mean, even back over here, this is of course a 5-minute chart. This is kind of the phase that I'm referring to, where we came back into it. We really cut deep through it. Even though it wasn't necessarily here, it doesn't mean we didn't have ratio dominance. So I think we still had ratio dominance most of this time, and I can sensitize this to get that information. But point is, the whole time we were grinding down, it went from the 2.5 to 5%. Oh wait, this is a 2.5 to 5% band, the 5 to 10% band. That horizontal turned into the 0 to 1% band. This horizontal effectively, maybe the bottom of end or the top end of this turned into the 0 to 1% band as well. And we did cut a little deeper into the gold mine, at least like the local sense of that, being probably 11.3. We cut a little more deeply into it than I wanted. And to cap it all off with the cherry on top, we hit a triple buy signal here with the 0 to 1% band lit, the 1 to 2.5 band lit, and the 2.5 to 5 band lit. So this was kind of like the bottom, right? 11.1. And a lot of people, I mean, this was a beautiful bottom call. I think more than one person I know was really optimistic in that range. And I think even you were, Fibo. I can't remember if you were as well, Sock, Tyler. But anyways, we've been running up. The gold mine kind of, was showing some teeth. We did have a lot of 1 to 2.5 signals, did lead us to some, it's almost like scalp trades. And now we're dealing with the gold mine. We had our jump to the upside again with a more violent gold mine this time. And by that, I mean a brighter color, which reflects more buyers are chasing the book. The ratio was stronger in this 5 to 10% band area. And then we just kind of, fell off. We lost some momentum. Now, those horizontals are what's worrying me, because looking at this one, the last chunk of horizontals that chased our vertical move have pretty much been taken out. The bottom end, we sat underwater there for quite a bit, down as low as like 11.6. And we are getting signals when we do dip. Of course, this has a wick, so we might not see a signal on a 5-minute chart. But we are getting a lot of support as we run down. And you can clearly see the support here in the book, 11.5, 285 wall. We've got 11.6, 128. So we do have some triple digit stacks, 11.7. $50 aggregations are pretty clean looking. This one isn't. 11.8's looking decent. So I'm kind of I'm getting a little nervous. I want buyers to step up. I would love to see a gold mine flash again and get in on that party before it really starts to look like this, of course. But that's all I'm waiting for. It looks like we did defend that at least the second impulse of the gold mine was upheld. That horizontal region was held nicely. So a part of me does believe we've face checked not one but two gold mine zones of accumulation, and that may be enough for us to start taking off. So just based on what I see here with the liquidity in the book, 0 to 10% distance from price is looking pretty stacked. 10,000 is in Bitcoin on either side of the book is very important. A strong number reflecting the fact that it's going to take either a lot of bag holders to dump or a lot of dry powder to enter the market, a lot of cash to enter the market. And I'm happy to see that there's enough liquidity in the market that a volatile move is going to be a little harder to pull off. I don't mind consolidating here for a bit, building some support, some foundation, psychological, and of course physical in the form of capital in the book, right? Or orders in the book. So I feel like we're going to consolidate here a little longer than I want. I think we could dip back down.
Joe is not moving.
Maybe test some of these like mid 11K versus.
There we go. No, maybe not.
I like the fast talk.
Going to scare some people out of the mid 11Ks. Really pick up, of course.
Uh-oh.
Oh, did I cut out for a sec? Yeah, there we go. There we go.
Yeah, you're cutting out a little bit.
Yeah, seems like it's still maybe a little bit. We are seeing you now.
Yeah, he's not moving.
He's not moving.
Okay. All right. So our first impulse.
He thinks he's moving.
He thinks he is.
Did get face checked. Oh,
yeah, Joe, we're having trouble. You were cutting out pretty much the whole last few minutes. Now it seems back.
Of course, it works the second I stop screen share. So I'll just finish up the thought, which was the gold. There were about 3 impulses of gold mine in there. From a range of starting at 11.8. Our first stop was at 12.1, and our second stop was at 12.5. So we've now checked that low 12 area. We've now checked the high and mid 11K area. So that's kind of like 2 gold mines have been checked and 2 accumulation zones have been checked, which makes me a little optimistic, but I feel like we're going to accumulate here a bit. And if we do accumulate, it's going to scare some people off. And I think we're going to sell off into the lower 11,000s before recovering from that and heading back up to 12K. That's just my initial thought. Right now, you know, we are walking into a weekend, so let's see how that looks. But yep, you know, to make a long story short, I'm happy to see that our last low was above the high, the low 11Ks, the 11.1s, 11.5, 11.600, pretty much around there. So
what was the date on that first gold mine that you're talking about, the 3 phases? What was the date? Was it the 11th? August
that
11th?
was the 17th.
The 17th, okay. Cool. No, I was just looking at some other stuff. I just want to know what the date was.
Yeah, it was the 17th is when it began, and well, I mean,
one of
it
the
was
gold
flashing.
mines. Yeah, one of the gold mines you said dipped down a little far. What was is that the 17th?
Yeah, basically the 17th when we created that impulse of our move up past 12K again, up to 12.5, and a supporting gold mine. There was, let's see if screen share works again this time. I'll get it right back up real quick here. And we will go to this screen. And over here, so this is what I mean. There's kind of like our first stop, and then we jump up. So you can see right here was our first stop. We jump up vertically, we jump up vertically. So I'm kind of looking at this as 3 separate gold mines. This one got checked hard. We bounced, but we came back to find a new low. Now that new low was right within this gold mine, and this is where we held. So this is really important.
Oh, hopefully it's not the screen share function.
Important to me that we have a higher low than 11.1.
Absolutely, yes, I agree there, and that's something that's kind of, I guess what I'm going to say is just pure speculation, but as speculators, that's kind of what we do, and this is a spot where I think of it as like everything was there for me for the breakout, and I really thought that we were going to break right through 12, turn that into support, and leave you know, anything below 11.8 behind for the next, you know, few weeks or month or whatever. We were talking about higher prices on the last few shows, and that everything was lining up for me, and then all of a sudden price just turns around and comes back down into some sort of a little accumulation zone. That just kind of makes me think there were a number of whales that didn't get long enough and sent the price right back down into the range to you know, be able to fill up some more before you know, lifting that area of resistance. And that seems to be what can happen when the price fails to break out, is that it'll come back and then, you know, a lot more will get bought or sold, and then it'll finally be able to take off. So that's interesting to see that it's right in that zone where I don't know exactly how your gold mine is calculated, but I'm assuming it's a major imbalance in the order book where there's a lot of buyers, you know, like 5% away from the price, that are sitting there in the order book and they're waiting, they're not spoofing. And then when the price comes down to that level and doesn't fall through, it finds support there. It's interesting to think about, you know, who is ready to buy that, and you know, maybe fading that breakout. So just a couple quick questions I had for you. I'm hoping that we're not having a trouble with the screen share, because that did give us an issue there. But one thing you mentioned at the end was with the weekend coming up, how does that affect your analysis when you're analyzing the order book? Are you noticing, like my original theory that I'm still kind of sticking to, but not nearly as much, I don't know, was that the big players are kind of like on a Wall Street schedule where they're, you know, traders who are trading other markets, and they're when Wall Street opens in the morning, that's when they're there at their terminals making big plays in Bitcoin and other things. And I've noticed definitely a correlation with volatility in Bitcoin around the beginning of the day in New York, and also in, you know, Japan and China. So following that theory is these guys probably aren't going to be around trading on the weekend. So maybe a lot of the big guys who are really, providing these signals or doing what they're doing with the order book aren't really around on the weekend. Is that your experience, or
yeah, basically, yeah, it's just this, the simple fact is weekends, the weekly close can have a little bit of pepper, but the weekends tend to be a little more boring. And that's what I don't want to deal with. I don't want to deal with another 2 days of a 24/7 traded asset really struggling to hold the 11Ks. We're not struggling to hold the 11Ks right now, but I would hate for us to get into a position walking into the weekend where it's going to be boring. People are restless. People might be making trades that, that they wouldn't otherwise make because they're just restless, simple as that. Right. And if that's the case and we walk into the weekend calmly, it might cause a little bit of a stir. People might want to, might panic. People might think that, we're topping out, and I just don't want to deal with that right now. I want us to build and create our support. 11,550 is it right now after 11,1, which is clearly a beautiful sign that we're moving up and creating higher supports. So as long as we can make it through this weekend in the high 11Ks and maybe even poke our toes back into the 12K range, or 12K waters, I should say, then I'm going to feel a lot more confident that this following next week and 2 weeks is probably going to be that time frame where we can bust through the 12s and make our way into the 13s, because we moved through 12 and the high 11s quickly. We really got stopped just because we ran out of steam, and I still think there's a lot more steam in this market. So I just don't want the weekend to draw that out, because usually when in my experience, as I notice things, if Bitcoin price stalls out, sometimes it's like a bad lawnmower. You might need to freaking pull that rope like 10 times before it starts, and that equivalent is 3 to 5 days in Bitcoin. So I don't want to deal with a shitty weekend putting us into a little bit of a rough early week. And then, right now I'd rather us just kind of establish ourselves going into the weekend, and hopefully we just kind of hang out without creating a gap or anything, a CME gap. And then we can start kicking us, then we can kick back off, moving up into the 12K range, maybe Sunday night or Monday morning. That would be ideal to me. That would really be consistent with this bull run, and it wouldn't be really irrational, which is good. Looking at contango across the board, we're looking at like 2% contango on September futures. We're looking at 4% contango in December. Really nothing extreme. So I think the market's relatively calm despite this violent upside activity. And if we can keep that up and act calm after we make these big moves to the upside, then it's going to be easier to make another big move to the upside. If people start getting scared and shaky, then it's going to start to scare more people out of the market. It's going to push bag holders into bigger bag holder accumulation zones, and then it's just going to draw out this process a bit longer. And I really want to see us break 13K and probably make our way up into the 14K range to cover that CME gap that's been there since probably over a year. I think about a year and change now.
Well, I definitely want to see us go up, and I wasn't really thinking about any CME gap for that being the reason, but I definitely appreciate your input. And so there's something that I'm seeing kind of in the order book that's kind of leading me to believe that we may have the situation where it's the guy trying to start the old lawnmower for a few days. And that's what I was interested in getting your input in. So hopefully we don't have any troubles with the screen share. Could I ask you to put it back on and take a look just at the most recent, let's say maybe a 15-minute on your exchange of choice, which I believe would be the Binance. So I want to look at the order book depth, the oscillators. And so, yeah, right there. Let's say, so what I've been really paying a close attention to is when these get to extreme levels. And I've been using the 0 to 5% mainly, but you could really see a pretty good example on the 1 to 2.5%. And you notice how up around maybe 2K or so is going to be about as, an extreme level. If you're right now, it's at kind of 1K on that access. So you were over the right one. Yep. And then,
yes. And just so everyone knows, SOC is referring to this blue line. This is asks plus bids, A plus B.
So yeah, I guess what I'm looking at is, so the y-axis, see how it says 2K, just to up or the right of your mouse, yep, right there. You see that? So that 2K, that is telling me like how many bids or asks. Is it like 2K bids? Then it would be the green line up there towards the top. And if it's 2K asks, it's the red line kind of up towards the top. But you see what I'm kind of getting at?
That's that's bids plus asks. This is individual right here, 505 bids, 1,000, or in that same range. We had, see how this bid ask spread. In fact, we can just double click this, and we can do this. So this means that the asks strongly outnumber the bids. Yep. This is the total asks in the market in the 1 to 2.5% range. This is the total number of bids, and
question is, like what I've been seeing, which I'm not really seeing here, but I just want to get your input. What if you see both of those lines way up towards the top? Say the green and the red are up towards the 2K, so that it's like really they're close together. So it looks like they're narrow. It would be a thin book if it was down here and they're really close together. But when it's up here around 2K and both of them are really near each other, that's telling me there's a lot of bids and a lot of asks, which could mean that we're in for a bit of a range, a lawnmower that's going to be hard to start. If like what I just pointed out, would that be your read if you saw?
Yes, that's 100% true. The more liquidity in the book, the harder it is to move. So this simple answer is yes. If we can move both bids and asks up there and kind of create this, like you see how we make these little like these small moves sometimes, or in this case we dumped or whatever, and both bids and asks decreased pretty significantly. If we had a similar effect to the upside, yeah, that would just mean that the book is stacked more heavily and it's going to be more difficult to move. It doesn't mean it won't or it can't. It doesn't mean a market taker isn't going to jump in and start, initiate a sell-off or a buyout, a FOMO breakout, whatever. It just means that the book is now stacked and it's going to be harder to do one or the other. And it's not uncommon for this to mean that we're going to be channeling for a while. And it's sometimes very difficult to commit to a position when we're really so like stacked in the book. But I think right now, if we're getting gold mines, then the bias is going to be long. And I'll be looking to scalp the long trades and maybe a short every once in a while. But again, my bias is going to be resting long. And if we get to this point, that means a breakout's probably going to be significant, or a breakdown. It means that whoever's going to initiate this is going to and cause this to start breaking and widening this delta spread is going to have to do a lot of work. And then you have to start thinking about the incentive. Who has the most incentive to move the market like that? Is it sellers, buyers, whatever, right? Is it a whale? Is it a freaking, big bag holder that's been waiting for us to accumulate above 10K? He's, big bag holder starts getting worried, and now they start to take out the, all the support. So you don't really know exactly what's going to happen. We just know that there's liquidity. It's stacked pretty heavily. And this goes for just about any band. If it starts reaching, a relatively high range, that's where we get, a little bit more indecision, less signals. And then, we might need to sensitize the signals down to, through the sharing function. You can simply click on SAS, type that in, and you can check out the dangerous signals, which actually aren't dangerous in high market liquidity scenarios. So probably 14K plus, the liquidity is stacked so heavily in the book that a danger signal, which would probably be dangerous to take in this liquidity range, would actually be much more reliable than receiving no signal, because the ratios won't be met to get you a 2.5 signal.
Beautiful. That is just what I was kind of hoping to ask you about, and that is makes perfect sense to me. So I'm glad to hear it. And as mentioned before, I'm more focusing on the BitMEX book myself, so I'll share that here. Hopefully that didn't get too confusing as we were kind of just talking theoretical. What I just described is what I'm seeing in the BitMEX book right now. So perhaps for the first time, we'll take a quick look at that and see if potentially potentially that could suggest that we are going to have a little bit more trouble starting the lawnmower. And that's something that I have come to really, respect and pay close attention to out of Fibo Swanee, is his ability to hear when
Start the
that,
lawnmower?
well, yeah, well, no.
No, I'm just kidding.
When it turns over, you have a very good, you've talked about it yourself, of looking under the hood of the market by taking out the kind of the ADX and the RSI and getting a feel for, is this market that's ready to break out? Is it, just lacking any momentum? Is it, really ready to turn over and start purring? So I'll be interested to hear what your indicators are seeing. Were you seeing enough momentum on this recent leg up? Were you seeing reasons why it needed to make another sharp move down? And then what are your thoughts about the support we've seen around 11.5?
Yeah, really everything that I'm looking at so far is still in play, still in a nice range. I mean, if depending on what time frame you're on, if you're looking at a daily chart, then everything's okay. But if you get down into the lower time frames, then yeah, you've had some chop and you've had to work with it a little bit. But even with the chop that we've had so far, nothing's really jumped out of range for me to get excited that the downside's going to continue. I actually just got a signal with the close here that to go long, and I guess I can explain why here. Let me share my screen.
Please do. But one thing I'm curious just to hear you get in is what you were thinking on that last move. Like I mentioned, when we broke through 12, I really thought that we had that everything was in place, that we consolidated long enough, and that I was seeing what I needed to see to think 12 would then turn into support. Were you seeing anything from the ADX or the RSI that made you think that was going to be a fake out that we retraced instantly, or were you?
Two things. One was the ADX we talked about last week was getting into that red flag exhaustion zone, where you could start to see a little bit of just kind of a little bit of momentum loss from the trend. And then another thing is the price reached a fib extension to where it looks for a little bit of reversal of a sell area. So that 12.2, actually I think it was 12.3 to 12.4 range was the beginning of that sell zone. So it actually makes sense to me with the move that we had to the upside for it to correct back a little bit. It makes sense. It's a market and it's just stair step into the upside, and it corrected back far enough to where it didn't spur on any additional selling interest. It was more just trading within the range that we've been seeing. So I'll try to explain all that when I look at some of this stuff. But what I wanted to start out with was on the daily here. Like I said before, on the break of this threshold right here, back on in the July 20th, it broke busted to the upside here on this, where the ADX showed some increase to the bulls, and then we had a break from the bear zone into the bull zone right here. So this is the one where if you're following the daily, the 38.2% level is at 11.2. So, with the high that we've seen so far, we're about 11.2 on that 38.2 that it needs to hold to keep the trend going. So if you've been following me since, basically March of last year, which there's a handful in the chat that I know that have followed me for a long time, everything's been holding fine with this move since the low when you look at it from a fib perspective. So this 38.2 right now is pretty significant, and this 10.4 is also significant. And the reason I say these two are significant is if you go to just take a fib retracement off of two other levels. This was a threshold break. This back here was a threshold break right here. And if you take the fib and move it up here to the current high, as you can see on that level right there, the 38.2 from this one, if you were following this threshold, it's never broke the 38.2 going this direction. So actually the 38.2 for this threshold back here matches the 61.8% of the current one that we're in. So that becomes a very, very significant level, which is right around that 10.4. Now I'm going to get rid of this one a second. And if you go back to the low of when this all started, and you take the fib from that level all the way up to where we are right now, the that level matches the 38.2% from this whole move to the upside, matches where the threshold break was right there at 9,100. So according to like what I like to look at is just the continuation of trend in the 38.2% level holding all the way up. And this is our latest threshold, and this threshold matching the long-term shallow fib tells me that we're in a really, really, really good floor in the market. So even if this breaks all the way back down into this zone, this should be an area where you should find a lot of selling interest if you want to keep this trend going to the upside. Now, if we break this, then that we're back down to the 7,000s pretty quick. So I just wanted to show you that. That's why that like these levels in here are pretty significant when you're looking at it just from a daily. So if you've joined in from buying this threshold, you're currently long at around 95 or 9,400. We bought a couple more times on the way up. So this 11.2 is the first level to maybe take a little bit of a sell stop and take some profit. And then if it hits this level, take a little bit more. But then when it gets down to here, this 9,100 is going to be, the floor to really watch. So I just kind of wanted to lay that out first, because if you're looking at the daily, you're not doing anything. Everything's bullish. You're just buying on dips and enjoying life. And that's what I've been doing for a while. So let's just continue doing that. Now, when you flip over to a little bit more near term and look at it a little bit more in depth, what I have on this chart is we just looked at the daily. So you got this long term, a lot of fib action going long term. But what happens in here, I got these little couple little trend lines in here drawn in here. So this is kind of price action happening within the daily. It's fib action within the longer term fib action. So it's a little bit more of a kind of a depth look. So this kind of movement that we've seen in here, and you look down into the RSI and stuff, and I'll go into detail in a second, is kind of where we're at today. So I want to look at this section right in here first. So when you look at this trend line, this dotted trend line I have right here, and then we had this large candle to the upside, we were down here, we were in a bull zone, but we were breaking above, back above the bear zone that sits behind it. So when I'm talking depth, I'm looking at, yes, we're in the bull zone, but we're getting more buying interest within the bull zone. So when that happened and this broke to the upside, the start of this move right here, I like to take the fib on it to see where the 61.8% level was, which was right here at about, it's kind of hard to see, but I'd say right there about 11.7. And then it busted to the downside, went to the 100%, and then it busted even further. Now, the areas I like to look for a reversal is when this moves up and you get the reversal down here in the 127 to 141. Now, yes, it wicked down a few times, but it definitely came back up into this reversal zone. Because when this broke, we broke down into the bear zone in here, and then this was a reversal. But it wasn't until this point right here where it broke back up into the bullish zone right here, and it broke this trend line, and we're back to the races again. So the thing is, when this broke down, yes, it did break, and everybody got scared, and everything's going on, but everything in fib world was holding really well, which was good, and this was another area to buy before we went to the upside. And then once this happened with these wicks down here, this trend line was created. So this trend line goes off into the future. So now let's skip to what's happening today, or within the last couple of days. Same kind of thing. We got this trend line right here before we break out to the upside. Right when you're in the down here where it breaks, it's in the bull zone, but it breaks higher again, and it breaks to the upside here. So the start of this, just like we did back here on the start on the leg, if you take the start right here and go up, come back down to the 100%, you get a reversal zone, just like you did back here, 127 to 141. The 127 to 141 was 11.6 to 11.5, and it dipped down in there just yesterday, I think, and it dipped down into that zone, and that's where I bought at 11.6 because I had an order in there, and it also held this trend line. It hit right on the trend line, hit right on the reversal zone, but yes, we are still in the bearish zone, but we were back here too before it worked its way up to the upside. So now what I'm looking at is I'm looking at the moving averages, because when you look at the 21 and the 55, and the red is the 21 and the blue is the 55 here, when this was happening right in here, and after we hit the reversal and it popped up, we consolidated a little bit in here, just like it is in the bear zone. But then the 21 came down and kind of went sideways here for a little bit along the 55 before it busted out to the upside. So fast forward to today, same kind of deal. The 21's coming up, and then the 55's kind of leveling out. Now, this is where it gets a little bit more nitty gritty, because when you look at the 55 here, it takes, I always look for 3 closes. And of course you had the 3 closes here because it wicked down. So all of a sudden this becomes resistance. But what happens is there is 3 closes above it to where it actually becomes support again. And then it came here, but it tested a few times, but it didn't get 3 closes back below the level. So this 55 exponential moving average became support again, and then we broke to the upside. All right, now what's happening today? We broke down below the 55, the 3 days, we wicked down just like we did here, right to the trend line, and we're back up. And now what we've done, as of the close today, which just happened about 10 minutes ago, we've had our 3rd close above that 55, which is above that 11.8, which is that level that we started this in the first place as support. So now that's a support level. So according to what I'm looking at, and yes, we're in the bear zone, so it's not a off to the races or anything, but this 11.8 starts to become a little bit more significant as a buying interest level from just looking at the internals of what's going on at the moment. So if this kind of works the same way this one did with the breakout to the upside, is as this kind of works sideways in here, if we start to find some momentum and get it to work to the upside, then we can start breaking back out again. I mean, I wouldn't really draw a trend line in here yet, but if you had one, it probably already broke basically right there. But when you look down at the momentum, it's really light and boring. So you could see a lot more consolidation in this area. But then again, now that we've had 3 closes above the 55 exponential moving average, now we need to get 3 back below it to get it off of support and back to resistance. And right now that doesn't seem like it's going to be the case at this point in time. So I say sideways here. Maybe it wicks down and touches this trend line a few more times around 11.5 or 11, or maybe 11.6, 11.7, somewhere right around there, and holds. And maybe even dips all the way down into the reversal zone again and pops back up. But as long as we don't get 3 closes below this trend line or below the 55, everything in here is support. And I think we're going to be headed a little bit more sideways to higher, and hopefully we get some momentum to go to the upside and get this thing rocking and rolling. So that's what I'm kind of looking at. Like I said, if you're on the daily, you're kicking back and enjoying life. If you're trying to find some more entry points, the entry points here would have been right around 11.3 or so, and then on the wick down here 11.6. And this is just in the near term. If you go back in history, there was other times, but these are kind of the areas to kind of look at. So if you did buy on this one and you did buy on this one, you're sitting right around this as a break even. So you might as well ride it because it's support until it breaks, and just keep riding it to the upside. So one of the things I'm looking for is a break of the bear zone to the upside here. That's why I got a little arrow right here. I'm waiting to see this get out of this zone and back into the bull zone. And when that happens, you're probably looking at, we could put a fib on for, really it's the threshold point that we're looking at, which is kind of this area right in here. And if you go down to here and you pull this out, what I'm looking for is this reversal zone right here, which is around 11.9 or so. So I think if we get up to this 11.9 and we get a couple more closes, or at least 3 closes above this zone, this will trigger, and then this will trigger, and of course we're close to that 12K, and I think we'll bust to the upside. So sideways up to 12K, and hopefully we get some momentum to get us some actual settles above that 12K level. So that's what I'm looking at. I know there's a lot of lines and a lot of goofy stuff on this chart, but what do you think? Any questions?
Yeah, some brilliant analysis and another brilliant purchase. Way to go on that last dip. No kidding, it's just been happy days for looking at the daily fibs and buying on dips, at least up until this point. So just, yeah, I guess one thing that jumps out at me that's right in line with how I like to trade that is something that maybe you can touch on a little bit as it is about the time for a refill before I jump into some charts myself. And that is the idea of entering near a reversal zone. If price gets very near where it's in danger of reversing the trend, I view that as a really good opportunity to enter, because if it doesn't reverse the trend, then you potentially, have a good bit of upside. And if it does, then if you're, the nearer you're getting in to that reversal zone, the quicker you can get out at a very nominal loss or even potentially break even. So just wanted to maybe touch on that, as that may be a little confusing to see. You have something labeled as a reversal zone, and then that's where your order was placed. So do you want to just touch on a little bit why you would be buying in a reversal zone? And then is it just the three daily closes below the 141 that you would be getting out at?
Yeah, I mean, one of the things when I say reversal zone, I'm looking at it from just the previous leg. So since we're from the high here and we're working down, we're kind of we're looking at time frames, right? So you get to the top here and you're working your way down. So right now we're definitely in a bearish move. I mean, on this 4 hours, so we're in a bearish move here. So when I say reversal zone, to me, that's the spot where the buyers are going to stop this trend from continuing. So, what makes a good technician is finding out where the trend either is going to halt or reverse. Not that we always know, but we try to get everything kind of looking at the internals to see when that happens. And in this case, this was the zone for that to happen. So that's why I label that the reversal zone. It's a reversal just from this leg. That's it. Now, I'm not talking a reversal of the overall primary trend, because that's been bullish. When you look at the daily, it's been bullish since here. Because I like to watch the fib levels from the beginning. Every time you go to a high, the 38.2 holds all the way up, held here, goes up here, and it still holds. So to me, this whole run is a bullish move. So there's no reversal zone created there yet. So, but when you come to a nearer term time frame, that reversal zone is just talking about this leg. This leg here only, because this was the leg from the breakout. This is the correction back, corrected all the way to the full retracement, and then it went further, and that's when that's where it typically, if it's going to reverse, that's the zone that it most likely should happen. Not that it's a given, but it's going to be the first spot that I would always look for. And the same thing back on here, same kind of deal. This reversal zone right in here is really just from this, just to reverse this move. That's it, just this leg to where we would continue back to the upside. So that's mainly what I look for, is once you've broken out of like this trend line here, and you take the start of the move, and it fully retraces all the way back to the 100%, and then goes further, look for that next little level as a quote reversal zone. But just a reversal off that leg, that's it. In other words, reversal, or what I should call it is support to continue bullish trend or whatever. But I call it a reversal because it's reversing that leg that I'm looking at right here, because that's where I want to know where the trend's going to stop, and that's where this trend to the downside to me is going to stop, or at least that's the first spot that I would look for.
Okay, yeah, I was confused. I was thinking that if it fell below that zone, then it would be signaling to you a reversal of the bullish overall trend. So I guess, yeah, I would be viewing that as like a pivot point, like where this correction should pivot and find a bottom. And if it doesn't and falls below there, then we're potentially looking at a major reversal, opposed to just a little.
Well, not major, because then you got to look at the 200%, and then you got the 38.2 at 11.2, which falls back to this this level here on the daily, which is very significant. So if it does end up breaking this, then you're going to drop right to 11.1 or 11.2 right in this zone. And then it would be 3 days under this. Then you're dropping all the way to 10.4, because then you're getting into an area of just absolutely no support. So these are the major levels to kind of watch. So I buy here. If it settled 3 days underneath there, I'd probably get out, or it depends on your book and how much you want to take risk. You can either get out, or you just add more on the dip down here if it looks like that's going to drop and hold based on some of the movements on different things. But that I would probably let it fall to here and buy here, because I know that this 38.2 is really significant from a daily perspective here. And then if it breaks down there, it still holds at a 61.8% at 10.4. I probably would stop it out a little bit here and then let it drop to 10.4 and just grab some more down there. But it all depends on your book and what levels you're looking at. But yeah, that's a good question, because I mark it reversal zone, because in my head, I'm just reversing that leg. That's it.
Beautiful. Well, thank you very much for the explanation. We are getting about to an hour here, so I'll make mine as quick as I can. And the one thing that I'm just consistently blown away by is how well the EMASAR signals are lining up with Fibonacci's. It's pretty wild. So potentially we can start by taking a quick look at that. I guess here is my chart, and this is where Fibo was pointing out his significant break and his critical kind of level, and that was very closely in line with where EMASAR gave us our recent signal. So I just thought that was interesting and something to.
Yeah, that trend line you have drawn on that last one you just showed, the third day above that trend line is where I actually start my fib on the thing I just did my example on.
That is
so that's pretty interesting.
Very, very interesting indeed. And so yeah, that was something that was kind of jumping out at me as you were talking, was how the levels you were mentioning really were lining up with some of the stuff that we were seeing out of EMASAR. And there are a couple of things that I will point to as well here. But starting out, just wanted to go over where you were looking at recently. I did send out a chart on this one, but I didn't buy it myself, because as I mentioned, I was kind of, I guess I would say not prepared in terms of, I didn't trim this, I didn't sell this. I was buying back around 11.2, and my trim orders, my first one was up at 13.3, so I did not have any trim orders filled here, which made me think I shouldn't really be taking this signal here, even though it was a good one. So I did post about this on Twitter, the buy signal that we were getting from the 1 hour chart. And there's one thing that I want to point out specifically for those of you that use this, as it is definitely one of my favorite things to look for, which is going to be when price is in the beach and the moving average crossovers are still bullish. For example, here we have a bullish trend. So the beach is bullish, it's a buy signal when we're in this level. And if we're in this level while the 50 is still above the 200, that's very much going to be a perfected buy signal for me. It tells me that there's a lot of just kind of pressure built up here. It's going to be really hard for price to keep moving against moving averages that are the short term is above the longer term. And people that have followed me for a while have heard me talk about that a lot, as like a magnet where the price gets below the moving averages. And then I view those as a magnet to where either it pops back above and turns them into support, or it at least pulls back into them and pulls back and into some sort of death cross. So I do view that as a really good opportunity. As I mentioned, I did take this back in here, which was the same setup. And you see how you get that sharp reaction back up to the moving averages, dances around there. And then after it fights through, it's able to kind of continue on. So as we've been talking about maybe needing to try to start this lawnmower a few times, to me, that's what my mind pictures. And kind of what we were talking about on a weekend, just this weird action where you take out lows and you get people that are bored to lose money and that sort of thing before finally, popping out. So I do think that that absolutely was a good opportunity to buy. I was not all the way down here where Fibo was. I was more looking at this one right here, but that was a spot that, again, I was paying attention to, but didn't take. And something I always pay attention to when this price gets into the beach and the moving averages haven't crossed over bearish, and something to definitely pay attention to. And that's where I will look for continuation here, as long as we can fight these moving averages and turn them back into support. If they fail to hold, then I would be looking at the 4 hour. And as we can see, these corrections just really haven't been getting to this 4 hour entry zone, which is telling me that the market maybe has started to move a little bit too fast for this time frame. When markets get volatile and move fast, I will zoom in. And this is potentially a good example where we had this long consolidation, volatility got to historical lows. It was a huge move to break through 10,000, and now I'm expecting significant volatility to follow. And when markets get volatile, they will tend to need shorter time frames. So this is a spot where when I see these dips not getting to my entry zone on the 4 hour, I'm really going to be considering zooming in to something like a 2 hour. And now we get some what we would like to see, where the price is getting to the entry zone and respecting it, and then continuing. So potentially the 4 hour is going to be moving a little bit too slow. And if we look at the structure of this, you can kind of see why I wouldn't want us to really even test this. In my opinion, this is the shakeout territory. This low is what a lot of people would be using as a stop. If we take away this channel here, what I was viewing it as, again, something I posted on Twitter as I was expecting this thing to really break through, as I was looking at this beautiful ascending triangle and the beautiful confirmation. So here it was. If we just kind of scroll over to that, for me, that's beautiful, because this is why I was really thinking we had what it took, was because we had a nice shakeout before this breakout. So we had this wick that came down. Let's see if we can move this over a little bit. We had this wick that came down below these lows here, which would shake out a lot of stops and put the market in a good position to leave anybody behind that sold this and went short potentially. And then you break out here. Now you've got a bunch of shorts that are needing to cover, and a market that I would view as not wanting to come back and let them out. We had good volume on the breakout. Like that to me is perfect. It matches this volume candle here, which was this sell-off. So the amount of it's kind of like that equal and opposite reaction, where you have this big major sell-off here, and then this big buying support on the breakthrough here, kind of like, something like this, or something like that is what I was viewing it as. So the volume and the pattern was really looking good, and that was really confirmed by this shakeout that occurred before that breakout. And now, as we have fallen back down, we do notice that the volume is certainly, people are getting much less interested at selling these prices. And it seems like there's plenty of people interested in buying if we can get back above here. So what I have been looking at is now this low has been anybody that did buy this breakout, and anybody that was, you know, a lot of people that bought this breakout or were buying these lows around here would be looking at this as a very, very reasonable stop. And this is where I've been looking for price to come down, take out this low, but not take out these lows. And that's very important to me. It would be, you know, similar to what we see here, where you've got these wick lows. Price comes down and takes it out, stops these people out, but it doesn't take out these lows. So having this come down below here and wiping these guys out, this is fine to me. But if it were to do something like come and test the 4-hour entry zone on EMASAR, make sure I still got the 4-hour. Now, this is down here. I guess now it has progressed slightly above this low, but that's still a little bit too close for me to keep this intact. I do think that these higher lows are coming in pretty nicely, and that this could be the pivot point. Those that have followed me for a while have heard me just kind of talk about Williams fractals, and I think those are a really good way to identify pivots and potential stop losses, just turning points in the market that should hold. And this is a beautiful one. It is your low in between higher lows on both sides, 2 candles on both sides that are higher lows than here. So that's a good sort of pivot point that this, I would now want that to hold and to stay intact, and potentially seeing a setup for one of my favorite patterns, which would be a big W to proceed from this. If we can get a bounce back up to that 11.9 area and find some resistance and come down and keep this intact, that would be looking good. And last thing I want to just take a look at is going to be some just lower time frame stuff. What are we looking at today? And looking at a critical level, actually, we can pull up Trader so I can ask, just point out what we were talking about with Joe. Let me see here, TR. Dive right into this bad boy. And okay, so here's what I've been watching today on the short time frame stuff. I really like to pay close attention to the order book. I think that's the most dynamic and the best way to keep track of shorter time frame stuff. And so that's where what you will see here is my 15-minute chart. And first thing that I want to take a look at are these fibs that I have drawn from this high down to this low. And I've actually been keeping one eye on this as we've been on this show, as we've been testing this critical fib, as we have deemed it last week. That has been the key area of resistance that I've been kind of watching for over the past day or so. And now it does look like it has put in a lower low and potentially a lower high, which isn't all that bad as far as I'm concerned, because there is kind of this gap right here where what I would want to see is resistance from 618 and then support from the 312, which is going to be lining up with the trend line here that I have drawn. So we've got that trend line, and then we've got this fib, which we can see has been an important level. It was support here, it was resistance here, kind of tried to fight through, and now we're up here resisting 618. So if we do come back for a test of 11,750, I would view that as my critical area of support. As I mentioned, I do want to see this low hold and this would be the area that needs to hold before we even get there. If 11.7 breaks, then I'm going to start to probably look for a move down below this area here. So with that being said, if we can break through the 618, the critical fib, then I would look for a full retrace to about 12.1. And I do think that another move down, if we can find support here, that this wouldn't be able to hold again. I'll definitely pay close attention to resistance holds twice. Okay. And if it gets up there a third time on higher lows, you know, now we're getting a ascending triangle type of situation. It's going to be tough for resistance to hold too much more, but that's a lot before we get back here. And that is what I will be looking for first, would be to see how price reacts down around here. And that being said, quick question for Joe, as we were kind of talking earlier about what in the order book could potentially identify a range. As you can see, I've got horizontal drawn, as I was mentioning, for like these extreme points. Where can these, you know, where does this book really like to get to? How many bids and asks, or anything? How few does this book like to get to, and could that help me identify critical points? I think so. And what I'm used to seeing is when we have the bids kind of way up here at the extreme point, that we've got the asks kind of down here. So it gives us this thick green band that is quite bullish and tells you that, you know, there should be a lot of support in this 0 to 5% area. So if I'm seeing this right here, I would be looking at from here down to 5% as the area of support where those bids are laid. And that's kind of like Joe was showing, where you get the signal, the gold mine, and it comes back to check it. Here we didn't, but that's what I would be looking at there. So anytime we've been getting up here, we've been seeing a big imbalance. And lately, I've been watching as both have been working their way up to this extreme. And I'd never seen the asks and the bids up here so thick, which makes me think, okay, that tells me there's a lot of asks between here and 12.4, and there's a lot of bids between 11.8 and 11.3. So potentially expecting a range from 11.3 to 11.4 while we eat away at either the support or the resistance, and the supply or the demand really takes over. That is what we should expect from here. And Joe did a great job of answering the question earlier, which kind of, you know, confirmed a little bit of what I was thinking, but I wanted to get it on a chart so people could see what we were talking theoretically about and get an idea of, is this kind of what you were picturing in your mind, Joe, as I was describing that to you?
Yeah, basically the areas to check the moves, and I think that's what you're getting at, right? Like the checking of the liquidity in the book, you know, a quick sell off just to see how strong those hands are, and then a regrouping.
Well, I did mention that, and apologies for any confusion.
Oh, no. My Zoom, by the way, has been cutting in and out. That's why. Sorry.
Oh, yeah, it's all good. So what I was more curious about is seeing how the bids and the asks are way up here. And in the past, I'm used to when the bids get way up here, the asks are way down here, and there's a big imbalance. But now we have asks and bids over, you know, it was a few hours ago, over 150 million, which is something I'd never seen before, which, as I was asking about earlier, that could indicate a range coming between the 0 and 5% plus or minus. And it seems like you agreed. So yeah, I just wanted to see if that's kind of what you're seeing here now on this exchange.
Yeah, it typically, I would say the majority of the time it's going to mean range. And you can even see how the bands have been tight for maybe even a number of hours. We're on a 15-minute chart. And you can see the bands have been relatively tight since about the early morning of the 20th or something, it looks like. And we've basically, I mean, I would almost consider that ranging. We haven't, plus or minus, $400 at this point is pretty much ranging to me in this price range. So I do agree that this is probably good evidence that we're going to range for a couple days. And that's why I do not want to have a boring weekend. I want someone to pull liquidity, or I want someone to start smashing through the resistance or the support. But I really don't like when the bands tighten up like this, because it requires a big move in order to offset that and create the bid-ask spread to widen out again. And then you can have like a more clear idea of, all right, we have support here. We might get checked. This is a good range to accumulate. I can put some orders down there. But in this case, that's pretty much what we're looking at. Is once it tightens up, then we're stacked on both ends of the book, and either someone's going to have to pull liquidity, or a market taker is going to have to come in and change the narrative.
And last question before we call it a day, this is something I'm just kind of starting to wrap my head around, is that is going to be much different, as far as I understand. This is a question, is that what you just described is going to be the case when the bids and the asks get close, but close on the upper end of the threshold, meaning that it's a thick that is balanced on both sides being thick, which is much different than down here. If we're on the lower end of the book and it's very close and narrow, that means it's actually a thin book, because there's very few bids or offers, and that's when you can get the sharp moves. So it's important to keep an eye on whether or not the bids and the asks are close together at the lower part of the threshold or at the upper part of the threshold, because it means the exact opposite thing. Would you agree?
Yeah, I mean, if we're getting it on the lower end, the volatility is much higher. This is also a volatility indicator,
right?
Because if there's no liquidity in the book and people start selling off without understanding that, then there's going to be a lot of slippage, and it's going to be like, uncontrollable. We saw that happen from 12,000 to 10.4, something, a quick snap that just really wasn't like what I said. I didn't think that was an orchestrated sell-off. I think that was an over-exaggeration that just got corrected. Even though the bid-ask spread was huge, there just wasn't liquidity, and we were resting on the lower end of that spectrum. So yeah, you could see that, we came from a decent range to a massive sell-off, and then we pretty much bounced back quickly. And not only that, we made our way to a couple big moves to the upside. So I'm going to agree with you here that if we're on the top end of that band, it just means it's going to take a lot more money or a lot more Bitcoin to move the price up or down. And that makes me a little scared, because that's where whales want to come in and dump their bags or accumulate or whatever. That means that that's the ideal condition to prevent slippage, is liquidity. And if we have it, then the next question becomes, who's more incentivized to move the price, the bulls or the bears? And I still think of us as small fish in a game of whales. And I think that question is most likely to be answered by a small number of people as opposed to a large number of small fish.
Oh, yeah, we could definitely talk about that all day. I don't think about the incentive, who has more incentive. I more think about it as who is stronger, who's in control, who's been getting their ass kicked, and taking it on the chin and underwater on their current position, versus who's the guy who is got a bunch of unrealized profit. His buys, like Fibo's buys, have been right on point. So when we get into a spot right now, if you're a big player that wants to do something, everybody's got the equal incentive, in my opinion. If it goes up or down X percentage, then you're going to make or lose however much you're exposed. Whereas one side is generally going to be in a stronger position, and the side that's in the stronger position is going to be able to really hold support when it needs to hold, because they're already in profit on all of their last buys, and that the guys are kind of swimming up water is what I'm seeing still, that the bulls are very much in control, and that they are holding the critical levels like we're seeing from the order book. The gold mine is coming and getting checked, and it is getting held. The fibs are holding right where they should be. EMASAR is continuing to do a good job of providing signals, and even it is getting potentially front run. The 4-hour hasn't even gotten an entry signal after this last breakout due to how sharply the market has moved. So it hasn't even gotten a chance to hold because support is held so strong above it. And these recent dips have been definitely testing people who are over leveraged or overexposed, but those who are managing risk properly and doing a good job of taking a little bit of profit here and there are in a position to continue taking advantage of the counter trend corrections. And buying dips in bull markets is, I think, one of all of our favorite things to do, and really appreciate you guys sharing your techniques and strategies. I've been learning as much or more than anybody watching. Always have a notebook full of stuff at the end, and glad to dive in deep to some of the order book stuff, and then also get Fibo's insights on his critical levels and where he is looking to enter in on that reversal zone. That was a beautiful job. And with that being said, I'm starting to think about dinner, and I imagine that you guys are doing the same, at least Fibo.
Oh, I am for sure. Ready to eat.
Joe never. He only.
He's just jealous.
I haven't eaten yet today. I probably I'm the worst eater out of the three of us probably.
Yep, I definitely learned that about you the first time we met in Bali.
Yeah, I know, huh?
And that'll, I guess, make it cheaper for you to take Fibo out to dinner for that steak.
Now that I owe him double or nothing, I'm gonna be eating the mashed potatoes and the spinach sides. He'll be having 2 steaks on his plate, and I'll be looking with some puppy eyes at one of them.
And
I'm sure I'll share.
You made me think when you were describing your first toss with your disc earlier, I thought you were going to say that it was an ace, and you had me wondering. Did you have
no, I would have just shit a brick if it was an ace.
What's your number?
But it was but I mean, even just parking it at 320, that's like awesome for me. So I was.
That was my question. Did you have any aces on the board or not?
I have never aced. No.
All right. That's that was my question. I've got 2 myself. So that was.
I mean, I've hit some 60 and 90 footers that are second shots, but I've never aced off the tee.
Yeah, that was a long time coming for me. And as soon as I made one, I made another one like a couple weeks later. It was so.
Oh man.
And I can't tell you the thrill of like that 320 when it goes in.
Oh, if it would have went in at 320, I just would have I don't know what I would have done.
Yeah, there's nothing better. So maybe if you quit buying the dip so well, the disc golfing gods will shine a little light on your stock. All right. Thank you, everybody, for tuning in. It's been another great show. We're always happy to take a deep dive into those charts. And any questions, Fibo is always happy to answer. And so is Joe. And I like to do my best as well. So thank you for hitting the likes, for subscribing, for smashing the bell. And a shout out to Kevin BH, I believe, sent us all tips last week. I know that I got mine, and that was greatly appreciated. And it was cool to hear that he hooked you guys up as well. I thought it was just me that he sent it. So it's cool.
That's awesome. Thanks.
Thank you, Kevin. And thank you, everybody, for the support, for the comments and likes and sharing. We will be at you next Thursday at the regular time, 7:30 Eastern Standard Time. And that is it for the Honest Analysts.
All right. Later, all.